Oman is also one of the countries that really needs to increase its government funding for infrastructure at the moment across the region. Saudi Arabia has seen some big infrastructure sukuk, and I'm going to briefly show you some slides on them, but not really talk too much about them. And that's not surprising, because Saudi Arabia is the country in the Middle East where actually you've seen the most development in the banking sector when it comes to project finance. So every country has to be looked at individually. The last bullet point talks about policy. There is no consistent policy guidance, at least to my knowledge, publicly available in the GCC as a region about how that region will A, use Sukuk generally, and B, finance its infrastructure. So as I say, it's difficult to learn from the GCC as a whole. You have to look at individual countries if you want to take lessons from how they're developing their markets. The press talk about GCC, and commentators talk about things that are happening in the GCC, and there's a couple of quotes on this page. It was expected that 2016 would be a really significant year in the GCC for Sukuk in particular and for infrastructure financing, but actually that hasn't really happened. And the middle bullet point there is a statement from Amir Iqbal, who some of you will know, and he's really identifying some of the reasons why it hasn't been possible to roll out Sukuk perhaps as easily as people would have liked. And I'll come back to some of his comments a little later on in this presentation. So, when we talk about Sukuk, what do we mean, and how do we go about structuring these instruments? I think there's a certain irony within the Islamic finance industry in that there are a significant number of different contracts that are available to us as Islamic law practitioners and as Islamic financiers. And some of the Sharia scholars are very keen to say that there is infinite flexibility in how you can deploy Islamic finance contracts. And yes, that is very, very helpful. But in reality, quite often, that sheer volume of contracts, that flexibility, creates a headache for Islamic financiers. And just to give you a few examples, when we're doing infrastructure finance, we can use istisna, we can use ijara, we can use ijara in its forward leasing form, the ijara mawsufa fi al-dima. And then we've got wakala, and we've got, in Saudi Arabia, procurement facilities. And in the UAE, we've got a statutory tool called the Musahata. And these are all great if you understand how they operate, but actually, there's quite a lot of confusion. You know, I do deals every day, and very often we have to spend a lot of our time explaining to our clients and to people participating on the deals whether or not the contractual form they're seeking to use actually works in their particular country, because their particular country may not have the right laws in place to actually facilitate the operation of that contract. So, you know, it can create a lot of aggravation and slow deals down, which is rather frustrating. On top of all of that, our Sharia scholars also will adopt slightly different approaches to different contracts. And it does mean that, certainly in the infrastructure space, very few contracts, very few transactions are the same. I'm already getting a 5-minute warning here, so I'm going to move on quite quickly. Satorp was a deal done in 2011, and it wasn't as big as your Plus financing, but it was 8.5 billion, extremely complex facility of financing in Saudi Arabia that involved export credit agencies, numerous banks, US dollar financing, Saudi Riyal financing, development agencies, and it also had an Islamic tranche comprising a procurement facility, a wakala facility, and I think there was some ijara transactions in there. There was also a sukuk, but the interesting thing about this deal is it was so complicated, the sukuk wasn't ready on the day the deal was launched and had to be brought into the deal after completion through an accession arrangement. So it was a very complex transaction. At the time that Satorp closed in Saudi Arabia, everyone thought that this was going to be the future of project finance in the Middle East and the GCC. And a year later, there was another major project financing in Saudi Arabia, the Sadara Sukuk. Again, another multi-billion complex financing with 3 or 4 different forms of Islamic contract, driven by the credit strength of the shareholders. And again, illustrative of what everyone thought was going to be the pattern for limited recourse project finance using Sukuk in Saudi Arabia. But it's fair to say that since 2012, the volume of those deals has not been repeated. And the next two slides sort of explain some of the reasons why. And I think Mr. McMillan picked up on this earlier. There is a fundamental difference between Sukuk as they are currently practiced and project finance and infrastructure finance. Sukuk are asset-based, which basically for our purposes means they are unsecured transactions. The investors in Sukuk rely upon the ratings that support the instruments. They're looking for certainty. In a project finance transaction, these are highly negotiated, complex transactions, usually secured on a limited recourse basis, which is a very different instrument to a Sukuk. You have to deal with a huge variety of complex intercreditor issues, which are listed on these two slides. And it's a bit frustrating because in the SATORP and the Sadara deals, these intercreditor issues were dealt with, they were addressed, and the lawyers and the advisors on the transactions worked out how to combine Sukuk with project finance. But the deals haven't really been repeated. And it's because of the complexity. The fact of the matter is that, I think it was been mentioned in one of the earlier presentations, these deals are complex and they're often time-consuming. And that means that the issuers don't always want to go through the perceived pain of doing a Sukuk for a project financing transaction. Thomson Reuters carried out their perceptions forecast study in 2015, and the main reason for using Sukuk, I think something like 36 or 40% of the respondents said it's for the diversification of sources of finance. There was no real objection to timeline or complexity of the transactions, but it is a significant factor when we're speaking to clients. So, if existing Sukuk structures are complex and difficult when you're trying to do a limited recourse project financing, are there any alternative Sukuk forms that could be brought to bear on the infrastructure space? And I think that there are, and I think that we as an industry are perhaps not courageous enough in thinking about what are the needs of the Islamic finance industry, and can we A, work with what we've already got, or B, can we evolve what we're using? And I'm going to talk briefly about, I'm going to skip that because we've covered it. I'm going to talk about the bottom slide here, what I'm calling capacity-based Sukuk and covered Sukuk. There's no doubt that in many Muslim countries, and we saw the slides for Indonesia here, there is a massive infrastructure demand, but there is a shortage of government money, either because insufficient tax is collected, or you're talking about jurisdictions where revenues are not raised through tax, or in the GCC, the oil price has had a major impact with projects being suspended or delayed because the government simply do not have the money available from previous resources. So they're going to have to start to think in the next couple of years about how to raise funding. Once they've worked out how to, and the capital markets appear to be attractive, because we know already that through the impact of Basel III, the banking markets don't like transactions of long tenors, and capital is becoming more expensive as a result of Basel III. So what do I mean when I talk about capacity-based Sukuk? Well, hopefully, many of you will be very familiar with the Emirates Sukuk that took place in 2013. This was a transaction that allowed Emirates to sell today its future ability to generate capacity on its route network. So it was selling today under Salam principles assets that would become available in the future, namely passenger seats on aircraft. It was an evolution of airtime. Some of you will be familiar that telecoms companies in several countries around the world have used financing of their airtime to raise money Islamically. Now, I'm not going to describe the Emirates deal in any detail because there's plenty of information available about that, but what I want to do is move to the next evolution of the first deal that Emirates did in 2013 to a deal that they did last year, which again I hope many of you will be familiar with, And this was where Emirates issued a Sukuk that was supported by an ECA, Export Credit Agency. And in this particular case, it was ECGD in the United Kingdom. And Emirates were able to use this to finance, for the first time, 4 new aircraft during their construction period. And that's the critical thing. Sukuk struggled to finance the risks of completion during a project, whether it's an aircraft or whether it's a road network. So if you can remove that completion risk from the equation, all of a sudden you can create an instrument that's much easier for investors in Sukuk, because investors in Sukuk are different from those financiers who finance projects otherwise. You can remove some of the risk from the deal. And the ECGD and other export credit agencies are very keen to find ways to roll out their products. The products have similarities to the ICIEC product that was described earlier, the IDB, Takaful or insurance-based support scheme for Sukuk. And if we think imaginatively, we can use that in conjunction with capacity-based approaches to develop new Sukuk structures. 2 examples of areas where we can apply this new thinking are highways. We've already heard about Sukuk being used in Malaysia for the Plus Highway. One of my first Islamic finance transactions was actually some istisna financing for motorways in Pakistan nearly 20 years ago. So roads and bridges have always been financed with Islamic or Sharia-compliant money. But actually, I think that we can find new ways to use Sukuk to finance highways and all sorts of other infrastructure. If we can understand, the critical point here is you have to look at the asset and understand what its output is, and whether that is an output that can be sufficiently clearly identified as something that can be sold today to the financiers in order for them to be able to sell it in the future and generate a revenue. That's how the Emirates Sukuk worked, and we need to work with our Sharia scholars to sort that out. The second example I've given here is education. I can imagine a scenario where instead of financing the bricks and mortar of a new school, you actually finance the output of the school. And what is that? The output of the school is that it will make available 5,000 desks for students to sit at to be educated for a year. You can find a way to bundle up that output. We've seen Sukuk being used in the Middle East to generically finance education institutions with the GEMS hybrid Sukuk that my firm worked on. And we've seen obviously governments use Sukuk to finance schools in Nigeria. I think one of the Nigerian states, when they issued last year or the year before, were using it to finance education. But actually, you can bring these capacity-based methods of thought to bear on things like education, healthcare, and many other of these public areas where perhaps there aren't enough tangible assets for you to finance. So the principle is what we have to think about applying. And then the last area I want to talk about, and this picks up again on something that was addressed in the very first lecture this morning, covered Sukuk. Many of you will probably not be familiar with this. There is, to my knowledge, only one covered Sukuk that has been done so far. In Malaysia, unsurprisingly, they tend to do these things first. And this is where a bundle of assets were identified as collateral to support a fundraising using Sukuk principles. Now, the difficulty with the particular Malaysian deal that was done, it was a Malaysian building society that did this deal, is that the obligation was a murabaha obligation that sat under the Sukuk. And although murabaha sits under many Sukuk in Malaysia, in the Middle East and in other parts of the Muslim world, murabaha is not accepted as an asset that can underpin a Sukuk, at least not on its own. It can be in conjunction with other assets. But the principle of creating a pool of security that can secure the Sukuk obligation may allow us to do Sukuk in those jurisdictions where we cannot yet do true sale, full securitizations. We heard earlier about how difficult they are because you can't get legal opinions on true sales because of the lack of a legal architecture. You can get opinions on different types of collateral that can be created that don't require a true sale. And so there may be scope, and I'm talking to clients already in the GCC about whether there are opportunities in their jurisdictions to try and develop the idea of covered Sukuk in the way that we have covered bonds. It's something that we've seen a lot of in the UK over the years, and we may be able to develop that in the GCC and then elsewhere in the Muslim world. So just to wrap up, and this is my final slide, I think that we don't need to spend too much time trying to reinvent the wheel. very often in this industry we think that because it's Islamic we have to do something that's different that no one else has thought of. Well, actually, as a lawyer, when I start thinking about deals, the first thing I do is I pick up the phone and I ring up my colleagues, whether they're in New York or in Singapore, and say, have you done anything like this before? And usually someone, somewhere in our network has. So we can look at things that have been done before, but we then can adapt them to make them Sharia compliant, and I don't think we should be frightened about doing that. We need to encourage the industry stakeholders to develop policy, particularly in the area of things like infrastructure. And the IDB, AOFI, IFSB, IIFM, these are all institutions that perhaps can improve their collaboration and try and develop policy so that an infrastructure financing that works in Malaysia actually could work somewhere else in the GCC and vice versa. Because at the moment, some of the things that happen in one country can't be rolled out in another country. And then regulators and legislators, we have to keep talking to them and helping them do the hard work that is necessary to improve the legal, the regulatory, and the fiscal framework so that they are fit for purpose in every country. Again, I'm not going to spend time talking about those because lots of other speakers have mentioned some of the areas where further work is done. And throughout all of this, we need to bring the Sharia scholars along with us, and we need to be saying to the Sharia scholars, please, 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 can you, within your networks, try and standardize some of the positions that you take in these complex financings to help us, the bankers and the financiers and the lawyers and the beneficiaries of Sukuk, deliver the financing that could be achieved with Sukuk if it can be adapted for the peculiar and specific demands of infrastructure. Okay.
Thank you very much, Mr. Miller. A very detailed presentation. Ladies and gentlemen, unfortunately, we only have a very limited time left to have question and answers. But I will entertain maybe one or two persons that would like to explore further. I open the floor for any questions that would like to be raised to the speakers now. Okay, one. Any others? Okay, two then. Please, give your credential. I mean your name and also your affiliation.
Thank you. My name is Ramsey Ramli. I'm from Asian Development Bank. Unfortunately, I'm glad to have that legal questions that I can ask to the legal expert. I've been waiting since this morning. But unfortunately, it is addressed to Mr. Miller in particular, that you skipped the legal case slides. But my understanding that most of the loan-based project dispute resolution are based on FEDEC. So is there any particular dispute resolution for a Sukuk-based project in case of default? That having said, as a member of the International Bar of Association, probably I'm wrong, but then I could not see many fora for the international financial law for Sukuk in particular. So in order to enhance the knowledge of the lawyers globally. Thank you.
Okay, thank you. Please, gentlemen in the front. Anybody can help to give him the mic, please? On the front.
Once more, I have to introduce myself, yeah?
Yes, yes.
My name is Lukman from La Trobe University. My question is directed to Mr. Miller. It's actually just, I'm asking the same question again from one of the previous sessions, which is, I asked whether Indonesia has developed any sort of track record or analysis of Sukuk, and if we wanted to look for those reports where we could find them. But I haven't gotten that information yet, so I'd like to ask Mr. Miller, we've seen some disaster cases happen in the GCC, and I just wanted to know if you see any of those signs. It's probably too early in Indonesia to tell, but do you see any signs, similar signs in Indonesia with the way has been presented today. Thank you very much.
Okay, two questions toward Mr. Miller, but I'm not really limiting other speakers who would like to give us your comments, but I will give the floor to Mr. Miller first.
Okay, I'll try and answer those just very, very briefly. I think when it comes to dispute resolution in Sukuk, within a Sukuk transaction, there are two elements. There's the underlying financing that creates the asset, and then there's the public offering documentation. Way down in the bottom of the procurement documentation, the construction contracts will involve FIDIC and those forms of contract. But when it comes to the financing, very often the forms of dispute resolution are either either courts in jurisdictions of England, if it's an English law set of finance documentation, or sometimes New York, or increasingly in many countries we are seeing local laws being applied even on the financing documents for dispute resolution. And it varies from transaction to transaction. The other important element of, or important development recently has been arbitration, where again you will find that in an increasing number of Islamic finance transactions, the parties prefer to select an arbitration tribunal, and then it's a question of which tribunal do they select. Do they select maybe the LCIA or the tribunals that operate through Paris, or in the Emirates, increasingly we're seeing the DIFC being selected as a fora for dispute resolution. So it varies from transaction to transaction, and it's difficult to be specific about what the parties will select. On the second question about the potential disaster scenario, I can't really comment on Indonesia and whether or not that you're building your bubble now. But I mean, again, I think that there's a lot more rigor now in the Indonesian system from a regulatory perspective. And I know, the central bank here and the other authorities here are probably looking very closely at what they're doing all of the time. And I think that generally around the world, and certainly in the GCC, the governments are so much more aware than they ever were of the risks that can build up within economies. And even in the GCC, people are already talking about whether Dubai's current expansion is building a little bit of a bubble there. But the government is working hard to monitor this, to try and mitigate those risks. And I think that's probably the case here, but I'm sure my Indonesian fellow panelists can comment on that.
Any speakers who would like to add comment? Maybe Dato' Nurzia? Maybe you have some experiences in settling some disputes.
As far as dispute resolution, so far in Malaysia, I've not seen defaults that requires this dispute resolution. But of course, in any Sukuk documentation, they would have provided the mechanism of the dispute resolution.
Okay.
But I think as far as issuers are concerned, we are very cautious in terms of when we want to issue the Sukuk, and also because we have the rating agencies that will do assessment of the Sukuk issuer every 6 months. So I think that gives a good confidence level to the investors in investing in the Sukuk in Malaysia.
Thank you. Faisal, would you like to add? Ladies and gentlemen, I think we have come to the end of the presentation of this session. I would like once again, thanks to our prominent speakers. Please join me to give a round of applause to our distinguished speakers. Thank you very much.
Thank you, and may we have all the panelists remain on stage. And now we kindly request Mr. Isa Rahmatarwata, the Assistant Minister, Ministry of Finance, to present the souvenirs to all the panelists and the discussion chair, and followed by a group photo session. Please rise. Yeah. Ladies and gentlemen, let's give a round of applause to our speakers. To all the panelists, you may return. And to Dr. Halim Alamsyah, would you please remain on stage? Our next agenda is a closing remark to be delivered by the Chairman of Indonesia Deposit Insurance Corporation. Allow me to welcome Dr. Halim Alamsyah.
Thank you. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Distinguished speakers, guests, ladies and gentlemen, we have come to our closing moments of our first annual Islamic Finance Conference Forum on Sukuk for Infrastructure Development. Today, we have learned about the overview of the use of sovereign Sukuk for financing infrastructure projects in which Indonesia has a first-hand experience. On the other hand, the development of its private counterparts or corporate Sukuk is still left behind. Financial Authority Services data shows that market share for corporate Sukuk issuance only accounts for less than 5% of total Sukuk market share in Indonesia. Therefore, rooms for improvements still exist for both Sukuk development, especially corporate Sukuk as well as government Sukuk. Despite being an alternative sources of financing, Sukuk can also be utilized as policy instrument for government to deepen Islamic finance market through the issuance of additional varieties of Sukuk for both sovereign and corporate types. Having diverged Sukuk will broaden the selections of financial instruments as well as the investors being targeted. In terms of developing corporate Sukuks, the government could encourage potential corporate issuers which engage in infrastructures to promote the development of corporate Sukuk market that are still underdeveloped in these countries. These issuers include corporations that are engaged in infrastructure developments such as constructions, power plant, telecommunication, toll road, sanitary and water treatments, public transportation, and others. Those issuers could raise capital through the issuance of various akad and purpose while stimulating the economy as well as deepening Islamic financial market in Indonesia. Distinguished speakers, guests, ladies and gentlemen, finally, as we already come to the end of the first annual Islamic Finance Conference in Indonesia, I, on behalf of Minister of Finance, would like to sincerely appreciate and extend my gratitude to Fiscal Policy Agency, Ministry of Finance, and the Association of Islamic Economists of Indonesia, as well as sponsors that have organized and support this event very well. I also would like to sincerely appreciate the participants in participating in this conference, and of course, we look forward to seeing you again next year. We hope that this event will not be the last that we would like to have. We plan to organize this event annually to support the development of Islamic finance in Indonesia, as well as our contribution to Islamic finance development worldwide. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Halim Alamsyah, for the closing remark. Ladies and gentlemen, we have now come to the end of the program. We would like to express our sincere gratitude and appreciation to our distinguished presenters, panelists, and to all of you participants of the first annual Islamic Finance Conference 2016. Finally, the organizing committee of this conference deliver apology for any inconvenience, and we hope to meet you again in the next agenda. Have a great day and good afternoon. Wassalamualaikum warahmatullahi wabarakatuh. Ladies and gentlemen, we kindly request to all of you, the participants of this conference, to fill the questionnaire and submit it to our staff at the registration desk. And to be informed that the certificates have been provided at the registration desk, and for the participants who have not received the certificates, please contact our staff to register your name.
Indonesia adalah salah satu founding member atau pendiri dari Islamic Development Bank tahun 1975. Dan sampai saat ini Indonesia tetap menjadi anggota aktif dan selalu berperan dalam pengembangan IDB itu sendiri. Tahun 1995, Indonesia di Jakarta pernah ditunjuk sebagai tuan rumah IDB Annual Meeting. Dan pada tahun 2016 ini, kebetulan Indonesia dipilih lagi menjadi tuan rumah IDB Annual Meeting. Dan kebetulan pada sidang tahunan kali ini, Indonesia sedang dalam fokus untuk membangun infrastruktur, sehingga tema dari sidang tahunan IDB kali ini adalah bagaimana mengembangkan infrastruktur dengan instrumen keuangan atau pembiayaan berbasis syariah atau Islamic Finance, dan juga bagaimana peran dari instrumen syariah tersebut di dalam mengurangi kemiskinan sekaligus mendorong pertumbuhan ekonomi Indonesia. Tentunya Indonesia adalah tidak hanya negara berpenduduk muslim terbesar, tapi juga bisa menjadi contoh yang baik karena Indonesia adalah juga salah satu negara demokrasi terbesar di dunia. Dengan bergabungnya nilai-nilai demokrasi dan nilai-nilai Islam di Indonesia, maka kita berharap Indonesia menjadi salah satu contoh bagi negara-negara berpenduduk Islam lainnya, terutama di dalam mengembangkan ekonomi dan pembangunannya. Dan jangan lupa bahwa Indonesia adalah salah satu dari anggota G20 beserta hanya 2 negara yang berbasis Muslim, yaitu Turki dan Saudi Arabia. Kita berharap peran kita aktif